Welcome to BD Daily Finance News Podcast, your daily briefing on finance and investing. Today is 2026, August 10th, and the market menu is spicy. AI chip demand, a possible Fed hike, crypto watching inflation, Wall Street raising targets, and gold quietly putting on a crown.
So basically, investors woke up and chose all 5 food groups: chips, rates, crypto, stocks, and shiny rocks. My retirement account just asked if it can take a personal day.
Story 1. CNBC reports that TSMC, the world's biggest chip maker, saw sales surge 45% amid strong AI demand. Because TSMC makes chips for major customers like NVIDIA and Google, its numbers are treated like a heartbeat monitor for the AI economy.
A 45% sales jump is not a heartbeat. That is the AI trade sprinting on a treadmill while yelling, "I'm fine." But the question is whether this is real demand or investors just buying anything with the letters A and I on it.
The simple version is this. If AI is the new electric grid, chips are the power plants. When the chip supplier reports strong sales, it suggests companies are still spending heavily on the infrastructure behind AI tools, cloud computing, and data centers.
I agree on the infrastructure point, but I am pushing back on the victory lap. Great companies can still become expensive stocks. Normal investors should not confuse AI is important with every AI-linked price is automatically reasonable.
Story 2. Bloomberg featured Macquarie's Thierry Wisman saying a Federal Reserve rate hike in December is possible. His point was that December lines up with a new summary of economic projections, and the Fed often likes major policy shifts when the dot plot arrives.
The Fed may bring a spreadsheet to the holiday party and ruin the eggnog. For households, higher rates can mean mortgage pain, credit card pain, and growth stocks suddenly remembering gravity exists.
Exactly. Higher rates increase the discount rate investors use to value future profits, so long-duration assets like high-growth tech and speculative crypto can wobble. But savers may benefit through better yields on cash, money market funds, and short-term bonds.
That is the rare finance plot twist, where your boring savings account walks in wearing sunglasses. Actionable takeaway: if you have floating rate debt, do not wait for December drama. Review refinancing, repayment plans, and emergency cash now.
Story 3. CoinDesk says the crypto week ahead is centered on U.S. CPI inflation and earnings reports from firms including Securitize and Gemini. Crypto is not just watching Bitcoin charts. It is watching inflation, regulation, exchange health, and institutional adoption.
Crypto investors pretending they do not care about macro is my favorite sitcom. If CPI runs hot, rate hike odds can rise, liquidity can tighten, and risk assets may start acting like they heard thunder at the beach.
Story 4. JP Morgan lifted its 2026 year-end target for the S&P 500 to 8,000, citing AI and earnings strength. That is a bullish call, and it reflects the idea that corporate profits may keep surprising to the upside.
Here is where I disagree a little. A target of 8,000 sounds exciting, but price targets are not seatbelts. They are weather forecasts with better suits.
Fair challenge. The smart move is not to chase an index target blindly, but to ask what would have to be true. Strong earnings, controlled inflation, manageable rates, and continued AI spending. If any of those crack, the forecast gets less comfortable.
I will reverse myself slightly. The target does matter because it tells us big institutions still see growth opportunities. But for real people, the job is diversification, not turning your portfolio into an AI fan club with a brokerage login.
Final story. Bloomberg reports gold is rallying again, helped by deep-pocketed buyers, with ETFs adding money after central banks. Gold often attracts demand when investors want protection against inflation, geopolitical stress, currency worries, or simple uncertainty.
Gold is basically the market's emotional support metal. It pays no dividend, it sends no earnings report, And yet when everyone gets nervous, investors invite it over and give it the good chair.
Quick recap. TSMC's 45% sales surge supports the AI infrastructure story. A December Fed hike is still on the table. CPI matters for crypto. JP Morgan sees the S&P 500 reaching 8,000 by the end of 2026, and gold is drawing serious buyer interest.
Your practical checklist. Do not overconcentrate in AI winners. Stress test debt against higher rates. Treat crypto as volatile. And know why you own gold, if you own it. If this helped, like, subscribe, and tell us in the comments which headline you think matters most for your money.